Hello and welcome everyone to this discussion with Yuriy Butsa, the Government Commissioner for Public Debt Management of Ukraine. I'm John Orchard, OMFIT CEO. We're going to talk to Yuriy about Ukraine's urgent and significant financing needs now and medium term, and some of the exceptional help which may already be on offer there. But we'll also look at how he and his team are working day to day and explore the more detailed aspects of engaging with investors, financial markets, and a range of multilateral organizations in these extraordinary circumstances. Yuriy himself has a useful background, having worked previously for the Ukrainian government in various ways on European integration and convergence, including a role working on the application of European directives to Ukrainian banking and capital markets. And before that, Yuriy worked at the Warsaw Stock Exchange, attracting capital to Ukrainian companies, just as he's now working on attracting capital to the country as a whole. So thank you very much for joining us, Yuriy. First of all, I hope that you and yours are safe and well.
Yeah, thanks for having me. It's a pleasure to be here. Sorry for being in virtual form. I would be happy to be with you in person, but due to the obvious reasons, it's a bit problematic now. But thanks. Yeah, everything is safer now on our side, and we are happy to continue as usual, working on the debt management in Ukraine.
Great. Well, we'll explore how you're doing that as well. I want to start with that, actually. How have you adapted to working conditions in a war context? I mean, we noticed you had your first local bond auction 5 days after the war started, at a time when you had an invading army bombing and marching on your capital city. So how is work carrying on as normal, and how is it different?
So, yes, you're absolutely right. So the first our decision was to do business as usual, which is obviously helpful for the financial system of Ukraine, but also give the confidence to all other people in the country, because if the government is fully functional, that probably is much calmer for people. And with that, yes, you're absolutely right. We had the first auction 5 days after the war started. It was a regular auction. We just switched to the war bonds rather than regular bonds and make it like a shorter line of instruments we started to offer. But surprisingly, I must say that what happened us a lot is the fact that we had 2 years of COVID before, because people got used to work not from the office, and obviously not everyone could work from home. We had to work mostly from shelters in different locations, but they still could work remotely. And that actually helped us to make everything up and running, not only on our side, but also on the side of banks who are primary dealers. So it took us a couple of days to test all the connections, but we were up and running in a couple of days immediately, and continue running in the mostly remote format up till now.
In fact, I've heard that from other debt management offices. They were surprised after an initial bit of work how efficient working in COVID became. So that does look like it's been a useful experience. Nevertheless, do you have any contingency plans to leave Kyiv if you have to, or indeed Ukraine?
Look, we don't make any plans to leave Ukraine. There was a possibility for women to leave the country, but our team stays in Ukraine, but for security reasons, we stay in different locations, so we have rather decentralized. So we didn't make a decision to move back to Kyiv fully, and practically speaking, in current environment, it doesn't make much sense, because everything is stable working now, and actually concentrating everyone in one place probably increases the risk rather than adds significantly to the efficiency. But yes, most of the political decisions are made in Kyiv. However, we're still able to coordinate in the virtual mode, and we keep on doing that.
It sounds like business as usual as much as possible. Tell us about your short and medium term plans for raising money. What are you borrowing at the moment, in what format, and how much do you need to borrow? And then we'll get into who, where, and how.
So we started, first of all, our short-term planning shifted to a week probably, and the long-term is not going beyond the 3 months. That's the biggest change we have in terms of the planning, because you then don't have any certainty in terms of the macro fundamentals or anything to plan beyond that period of time. So we switched to very short-term planning. We didn't have other choice. So we try to calculate the fiscal gap for the next 3 to 4 months, and that's the maximum we can do reliably. And obviously, we started with the war bonds, and war bonds still help us a lot in refinance all the commercial debt, but also finance part of the deficit. We do roughly $1 billion per month of the war bonds, sometimes more, on domestic market. With we actually the only difference, before we were selling them to banks and other institutional investors. Now, because of the nature of the instrument, there are a lot of retail participation. So what we had to change actually is work with retail banks who can simplify in a very expedite manner the access for the retail investors who are buying in small amounts, but there are a lot of those who want to invest their money and support the country in this hard moment. And they were very quick in implementing new IT solutions. What they normally would take them years, they were done in months. And I must say that there are a lot of now working solutions when you just need your phone and nothing more to buy the war bond. So that's one of the key sources of funding. But given that it doesn't help us to close all the gap, obviously a calculated gap is around $5 billion per month. We try to maximize the concessional funding to close as much as possible. So our logic is to get all the financing we can in concessional form to close as much of this gap, and the residual will be covered by the financing through the central bank, which we didn't do in the past 6 or 7 years. Even during the COVID times, Ukraine was the economy which never relied on monetary financing in any shape or form. Now we have no other option. So we turn rather cautiously and carefully, not to impact inflation that much. But I must say that most our hopes further on are on the official sector financing, and we try to do it mostly not even in the soft loans form, but try to do it mostly in grant form, because Ukraine was probably the only one emerging market economy which ended 2021 with debt to GDP levels below 2019. So we are the only one who faced out of the COVID crisis with a lower debt to GDP level than before.
Sorry, Yuriy. So I wanted to explore that a little bit. So you've got this retail demand, war bonds and so on. On the one hand, obviously you've got a huge need for funds for the government and a disrupted economy. And tell me a little bit about whether that, on a net basis, has changed your cost of funds when you balance out the disruption with the domestic bid. How is that netting out for you?
So we've actually, what we did, we fixed. So we stick to the rate which was a pre-war rate, right? So obviously, because of the capital controls imposed and second market effectively stopped functioning, there are no price discovery on the instrument, and obviously not to increase significantly the cost of funding for the government in that circumstances. We came with the idea actually to stick to the pre-war rates for the funding. So you somebody can call it like partially a charity investment, but it still provides you a return similar to inflation levels. And given that that's the only instrument available domestically, we try to move that direction. So we pay pretty much coupons or yield on those instruments are on the pre-war levels. And we also give the same possibility to international investors who cannot repatriate from Ukraine at the moment of time to actually reinvest on the yields they were invested before, at least not to lose on their hryvnia cash accounts in the country. And we already now see that also actually central bank agreed to lift the capital controls on the repatriation from the 1st of April next year. So we hope that it will be another incentive for those investors to reinvest all their proceeds we repay this year in these instruments and wait until the second quarter of next year to get repatriated.
So it sounds, Yuriy, like you're not banking on the understandable goodwill of people. You're actually working technically to make sure that Ukraine remains a potentially attractive investment for international investors.
Look, we spent a lot of time and efforts and resources to build local domestic market and to come to the point when it's very similar to all other developed markets in the region, right? So it will be definitely not wise to waste, all this like years of work done. And obviously the circumstances are not coming from us why we have to do capital controls and other things, but we cannot do differently in the environment. But we want to be as cooperative and as open to all international investors as possible. So we keep this market fully functioning, and once the war is over, we come back to normal and come back to this commercial funding. So for us, it's very important, first of all, to have a full access to the commercial funding as soon as possible, but secondly, to have it through the domestic market as a primary source of funding, because one big part of our strategy was to increase of the domestic part of our debt, which still is around 40%. And that's why we need to have this market fully functioning and not damaged due to the war.
Presumably, of course, when the war, I hope, finally ends and the reconstruction story starts, and you're, of course, seeking finance for the reconstruction and talking about it already, there should be, of course, a growth story as well, which should immediately help the economy. Is that what you're getting ready to finance?
Yes, exactly. That's what we're thinking about already in advance, and we really hope a lot for the official support in rebuilding the country, but we are also reasonably understand that without access to commercial funding, it will not be possible to finance all the needs. So we want to, that's driving our thinking in terms of why sovereign should have the access to the market as quickly as practically possible, immediately after the yields normalize. But also we understand that a lot of rebuilding should be done on the municipal and corporate level, and we want also for municipalities to have access to financing, but also for all the corporates who were like traditional borrowers from external market to have a possibility to have a quick access, because the need of financing will be big. And obviously we expect a growth after those investments, and we expect a good positive story for the country, for all the investors. But yeah, for us it's important to have the access to all possible sources of funding, because the needs we expect to be huge.
Yeah, exactly. I'm thinking a little bit about the NGEU program that was set up by the European Union to finance the recovery from COVID, and the discussions about the balance between grants and loans to the recipient countries. Do you have thoughts on that with respect to Ukraine, the extent to which you might expect grants as well as loans, and what proportions those might potentially have?
Okay, at the moment of time, our discussions with EU were on the closing the immediate financing gap, and they have a macro-financial assistance program, which were very helpful and timely for that, and we are grateful to them for that one. But obviously, there are two things to look at parallel. First, our aspiration to get the candidate status as an EU member, and also the existing facilities for post-COVID support, which are in EU, which we need to look at for the reconstruction. And yes, I think that given that there's already a mutualization of debt happening in EU, and they have this facility, so and we count on a lot of EU support in the future to using the examples which already were tested in practice, is pretty much the easiest and most optimal way to move forward.
We've seen the support, the financial support that's just been passed in the US to help with the war effort. Tell us a little bit about what support you've had internationally from multilateral organizations, important governments, the G7, G20, and so on.
So we enjoy support from both multilateral organizations and our partner countries. Obviously, we had ongoing discussion on IMF next disbursement, actually, when the war started and Russia attacked Ukraine. And we had, obviously, because there were the setup needed to continue this program, to change this to a RFI disbursement. It was one of the first funds we got to support the budget were from the IMF. Then now we work a lot with the World Bank. We use a lot of their facilities, existing and new facilities, to finance the deficit at this current times. We also, as I said, getting money from EU, from EIB, as well, and a lot of support from partner countries, like we can name all the G7 countries, but also a lot of EU partner countries who help us very sizably. What we try to do, we try to make it simpler both for donor countries and for us. So we try to channel those funds through the World Bank, both in grant format or through the guarantees to increase their possibility to lend to Ukraine, but also through the administrative account, which was set up by the IMF, which is our idea is to be used for the channeling of SDRs, which were distributed among the countries last year, but also it can be used for different other type of financing. So that's what we're exploring, and also given that we are mindful about debt to GDP levels post-war, because unfortunately in that equation we are not in control of the denominator. So we ask our partners to switch to the grant financing, and we see what you mentioned, US initiative is very timely. We got already $500 million of grant financing from US, and we expect this number to go up subject to all the necessary legislative approvals. We wait actually in the coming weeks another $500 million from US, and we also got a lot of support already from countries like Canada, France, Italy, UK, and others. So that's our main kind of partners and main sources of funding from the international area.
In terms of IMF support, for example, typically support from the IMF comes with conditions, conditionality, attachments to reform programs, and so on. Has the war changed the frame of reference for those kinds of support from multilateral development banks?
Look, obviously, reform efforts are important, but now we are not in the position to move through the structural changes in the economy because we don't have understanding on the structure of the economy post-war and what will be needed. So what we concentrated with IMF when the war started is to get the rapid disbursement through the RFI instrument, which was tested in the COVID times when it was a need for the quick disbursement. And then obviously once we'll be in position to have some sort of macro framework for a couple of years as a basis for the IMF program, we stand ready to engage with the IMF on the new ambitious program. But there are not the preconditions for the discussion to start were not met. So what we do now, we are in close contact on the weekly basis with IMF teams on analyzing the trend and on sharing all the data, what's happening in fiscal and monetary, etc., for them to be fully onboarded in terms of information flows. But we are not there yet in terms of the preconditions to start a new program or discussions about new program.
Understood. Do you have a broad sense, Yuriy, for the order of magnitude of financing that Ukraine will require to rebuild? We published an article recently which put the range anything between 200 billion and $1 trillion. And of course, we won't know precisely. But do you have a sense of the order of magnitude of the kind of levels of financing you're going to need to help rebuild your country?
So it's hard to tell because the situation develops. Unfortunately, develops in the war situation. The more the shelling and like hitting our buildings, etc., and infrastructure with. So basically, the latest I had only on the physical infrastructure damage calculated by some Ukrainian NGOs and the World Bank. They were announcing around the spring meetings were in the 80 billion of plus minus in the physical damage only. Now, if we take a broader approach, it probably will come to the 100 billion very quickly. But the answer to the question depends very much on the methodology of calculations, and whether we want to rebuild what was damaged or what to build better, and or rebuild it differently. Because there is, for example, open question whether people will come back to live to the cities which were completely destroyed, or you would rather expand the other cities where they're already living eternally in Ukraine. So there are a lot of questions which, without answers now, to come up with the really precise numbers.
Do you think that the economy could grow quickly if you get the financing in now? Have you done any calculations about how the fiscal situation might evolve once the war stops and reconstruction can start at the same time as potentially economic reform? Have you got a broad sense for how that might look?
So our goal now is for the economy to find some sort of new equilibrium, right? And we try to support the economic agents to start operational, to working properly, to employ people, to pay them salaries, and to have possibility to sell their goods first. And that's, before talking about growth and rebound, we need to stabilize the decrease of the economy. And one of the big issues there is obviously the logistical constraints, because we are one of the big exporting country and we're a very open economy, and we have losing the safety of shipments through the sea. Yep. It's a big constraint. So the government is now concentrated on removing the bottleneck, or like trying to simplify or to make economy in principle operation. Obviously, then we will have to post-war we'll have to find, and even now actually find the ways how they find the proper sources of growth for the economy. We count a lot on more trade with EU and more trade with other partners like Canada, UK as well, who are lifting now the tariffs for Ukraine. So we also look a lot at the, for example, electricity market, when we want to fully integrate in EU market and our producers to be able to access that market and sell there. So we count a lot on the closer integration with EU to give a very big boost for economic development, and then we can talk about the growth numbers. But now, as a short-term priority, obviously we need to come to some stable equilibrium, at least to start to grow from somewhere.
And good luck with the accession talks with the EU. I hope they go well. What other forms of financing have you been exploring, Yuriy? Are you expecting to issue USAID-backed bonds as you've done in the past, for example?
We explored that option in the past, like early this year, even before the war started, right? So from the cost-benefit analysis, it's pretty similar numbers for US to provide the support in grants rather than the guarantee. But we obviously looking at the way how we can engage private sector in the financing. So we're looking and exploring various options which were used in the past in various countries, to see whether something can be working. We see a lot of support from the private investor community in communicating with them, and obviously we are engaged with them very regularly and try to be open and provide all the updates what's happening. But obviously the risk profile of the country and our yields on the external markets are at the level which doesn't allow us for standalone access to the market. So we are looking at the precedents. I cannot tell you we have something precise in our minds, but we are definitely thinking actively in the area how to bring back private sector to financing Ukraine, especially in the reconstruction phase. And what type of credit enhancement solutions can be used to make that more interesting and cheaper for us.
Good luck with that. It's a contentious and complicated area, but some people are talking about, of course, reparations from Russia. Do you have a view on that, Yuriy?
We watch closely on the legal initiatives in our partner countries. We obviously believe that from the moral standpoint, Russia should repay what they damage in full, and we will pursue all the actions from our side to make it happen. But I think a lot also depends on the legal processes in the countries where those assets are frozen, and we are communicating with those countries a lot to find legal ways how these reparations can happen in the easiest possible manner.
And in terms of debt forgiveness, from what I understand, you're keen to service your outstanding debts to preserve your reputation in markets. Everything you said has sounded like careful attention to business as usual. What do you think about requesting debt rescheduling or forgiveness, Yuriy?
We are not calculating those numbers now. First of all, as I said, most of our debt repayments are on the local market, so north of 75% for this year, and we finance ourselves much more from the local markets now. And actually, we want to rely on this source of funding. And we shouldn't forget that big part of the Ukrainian banking system is actually owned by the government. So any operations with the debt domestically which can damage the banking system will implicitly damage the state from other side, so that's why we don't see a material problem for this year at the moment of time, right? Because of this specific setup. In the past, we were also actively engaging with the market to proactively tackle the upcoming maturities, and we're buying back or exchanging the debt. So that's why the commercial debt repayment are smaller than they were before for this year. But to have the general view on all the debt sustainability in Ukraine, once again, we come back to what we started, that we need to have a proper macro framework.
It sounds like you're not asking for any special pleading. You intend to carry on like any other debt management office, from what I'm hearing.
Look, we are doing the regular operations now, but from other side, we don't have any debt repayments to worry about in the upcoming months. So that's why yeah, we are fully in position to, in the current environment, to carry as usual. But once again, what we don't have a view over like midterm or long-term perspective, because we don't have fundamentals to play with. So that's why I cannot tell you that, that the situation is stable at the moment of time.
Understood. Setting aside hoping that the war will stop, what would be the one thing that you would change if you could to make your job easier in raising finance for Ukraine?
Actually, the war stopping is the most important part, because everything else, it's duly executed in Ukraine. So it's very hard to think something beyond, because look, if you look at the Ukrainian story without like Russian invasion, this year had to be a really successful year for us. So the debt metrics was very good. Our story was outstanding. If you look at other emerging markets, the price for the commodities of our we export were growing. The macro framework was very solid. The markets were developing. What we want to come back to this normal or new normal, without having Russia killing our people and destroying our country. So that's the most challenge. Everything else is very manageable. We know how to do our job very well.
Absolutely fair enough.
Obviously there.
Well, Yuriy, you got the goodwill of the great majority of people around the world. We wish you well. We hope the war stops soon. We hope that your remarkable country can be rebuilt at speed. And I'm sure you'll do an excellent job of raising capital for that task as quickly and efficiently as you can. So thank you very much for talking to us today, and we wish you the very best of luck.
Thanks for having me, and thanks for this interview, and I would hope to see you next time in person, and hopefully next time in person in Kyiv. Thanks.
That would be fantastic. Looking forward to it, Yuriy. Have a good day.
Thank you. Bye.